So today I want to show you my supply and demand strategy, what works for me and how you can also do it. I'm not going to waste your time. I'm not going to be giving you a long-winded explanation. I'm just going to explain it fast. I'm going to show you what I do. So without wasting any more time, let's get into it. Now personally, sometimes, not all the time, I do like to use the Heikin-Ashi charts just to scope out areas where we can find supply and demand. The reason for this is because we can see big exponential growth with the Heikin-Ashi chart. As you can see here, we got big growth here, and we can see when it slows down here because the bars get smaller, and also you can see where buyers and sellers are fighting because you see the wicks at the top and the bottom. And what you got to want to look at is what story does a candle tell? You can see here this candle, this tells a story. Buyers, lots and lots of buyers. It pushes up. Do have some seller activity with the candlestick, with the candle wick coming down a bit, but largely this is a buyer's candle. What does the story of this candle tell? Well, here, buyers and sellers are fighting. They try to push it up, they try to push it down. You get about, then they close around equal. No one won on this candle. So that's what candle story is. Anyway, supply and demand. We're going to want to find a pretty good example, but also we don't want to pick anything. We don't want to cherry pick. So we're just going to do something random. Here we go. Let's go here. So of course, there is a chance that when we do this, it's not going to work because that's how trading goes. However, I want to show you a real example of what could happen. You're going to want to draw your demand zone here. And the reason why I'm drawing it here is because we can see where price has had big falling and then prices seem to slow down around here. We can probably make this a little bit smaller as well, just like that. Next, let's see when price next reaches this area. So price reaches the area here. As we see, price actually does get pretty stagnant in this area. Now finding an entry might be a bit tricky, but this area does react perfectly. We don't really get the best entry with this supply and demand, I will be honest. However, we can see that it has worked really well because we got this big growth, this big price movement upwards. So how can we find an entry for this then? Well, a couple of things you can do is drop down onto a lower time frame. Now, usually I don't actually like to trade supply and demand on 5 minutes. I like to find entries on 5 minutes, but still, we found a pretty good example. So what you're going to want to do, get your take profit and stop loss tool and we can draw it out. There are a couple ways that I like to enter. And of course, I'm going to be looking at the bars, seeing what the bars are doing as price moves up and down. So for example, one entry you could possibly do is, and this is a higher risk entry, but enter on the first green bar. As you can see here, we got red, red, red. You can enter on the first green. Now, the benefit with this is you're going to be getting in at a lower price. The downside is it's not a lot of confirmation. So I will show you this example anyway, because it is still a good example. What we want to do is to find our take profit is to find the next supply. Find the next supply area, sorry. So that's around up here. And as you can see, again, it reacts perfectly. You can see how the strategy works. So I like to put it towards the bottom because I like to be conservative about it. If you want, you can put it towards the middle of your supply or the top of your supply. However, you are taking on more risk with that because then you do have a chance that it's not going to reach the top of the supply. And if you look at where price is trading in the supply, it very rarely reaches the top. It's mainly in this area here. So you can probably find a good entry here, but you're going to more likely get an actual take profit if you place it lower, but then you will have a smaller risk to reward ratio. As for my stop loss, what I like to do is put it just below the previous low of the previous supply. So we're just going to put it here and also put it just below as well. Don't put it in line, put it just below. We want some wiggle room because there is a chance that price will double bottom. There's a chance that price will stop just above. However, there is less of a chance that price will break the lower low. It's still possible, but it's a much lower chance. So we want to have that bit of wiggle room. And as we can see, this trade works out perfectly. We got a 3.5 risk to reward ratio, which is great. And if we were to be trading this on the S&P 500, which this example is on, we would have made 0.7% before any form of leverage. If you're using ×2 or ×3 leverage, then you can see how that's a pretty good return for what is essentially, how many minutes is this? Let's have a look. Let's get the measure tool. And that is a 44? Yeah, 44 bar play. And this is on the 5 minute time frame. So this is over, it says there, it's over the course of a day and 21 hours. And what's great about this strategy is you can do it as a form of set and forget. You can do this entry strategy where you do enter on the first green bar, set, forget, and you don't have to let your emotions get in the way. So if you want more videos explaining other strategies that I use or going deeper into this strategy, let me know in the comments, like and subscribe.